Hello everyone, my name is Richard Schaefer, Field Partner and Advisory Board Member of United Financial Freedom. It's my pleasure to come to you today to talk about a subject that's very dear to me. And that's, for those of you that are financial professionals, this subject is really intended for you. Having been in the financial services arena for nearly 3 decades now, in the insurance arena, securities brokerage, mortgage and real estate, it's really given me a unique perspective on what a day in the life is like for someone in your respective field. One of the things that I noticed over the years, having had almost 13 licenses at one point, was that every unique aspect of financial services has a little bit different nuance to it. Mortgage industry is a little bit different than real estate, it's a little bit different than insurance, and a little bit different than the securities industry, or even being a CPA or an accountant. But they all have some very, very consistent themes. So we're going to talk about a couple of ones specifically today that are more related to your industry. We're first going to start off with those that are in the mortgage industry. Now, this is one that's very near and dear to my heart. I was fortunate to own 3 different mortgage companies over the years, and we did various kind of business, both residential, commercial, etc. But for the purpose of this conversation, we're going to give a little bit more of a broad-based conversation. But for those of you that are looking at this because you have an interest in finding out perhaps more about United Financial Freedom, or specifically the Money Max account, and how it could be something as a useful tool to be able to open up more doors for your clients. One of the things that I know in these fields, and oftentimes people forget that the greatest concern someone has in that industry is, will it distract my efforts, right? Because you've got a lot of things going on. The regulatory environment has changed so much. It's an ongoing process just to stay ahead of that. So we don't want to do anything that's ever going to distract your day-to-day focus of what it's like to transact business, create opportunities, have more clients, and of course generate more sales. So that's the exact opposite of what's actually going to happen. So one of the things that we want to be able to help accomplish here is to be able to do exactly that. But we're going to start off by breaking into 3 different parts: before, during, and after. So the before phase of this process for any financial professional, but for the purposes of this conversation for mortgage brokers, is advertising, marketing, lead generation, and branding. Now, any professional in the industry that's full-time and takes this business seriously is deploying various things to accomplish that. They're doing different things in the advertising space or marketing, or again, lead generation or branding. And all of those things take a great deal of time, energy, resources, and often capital as well. So our goal is, we simply want to help you do more of what you do, exactly where you're doing it, but help you do a lot more of it and do it more effectively. And here's a couple ways we can do that. So at the front end of this process, a day in the life of a mortgage broker or a loan officer is, how do I identify more qualified potential candidates that I can represent, that I can get an appointment with and ultimately transact business with. Now, we know that becomes a very perilous terrain sometimes, because first you ask yourself, how do I develop a strategic advantage or a competitive advantage over my peers? There's lots and lots of people in the mortgage business these days, and outside of having to always compete strictly based on cost and rate and so forth, you want to be able to have something else that sets you apart, something else that helps create a little different conversation and a connection with you and your clients. So anything that can help you open more doors. Now, most of the conversations these days go, what's the lowest rate you have? Or what's the lowest cost that you can charge me, and things of that nature. It's a very difficult game to play because there's a lot of manipulation in the marketplace. People say things, and I hate to say it, but there's oftentimes a little bait and switch in that process. People tell clients what they want to hear to get them in the door, and then it doesn't work out that way down the road. And unfortunately, that doesn't give you a very good reputation. So one of the things that we can do with the Money Max account is to be able to open more doors, to be able to create more of those opportunities. And here's how we could do that. Let's say, as an example, you've got a client that is coming to you and they really, really know in their heart of hearts that they want to take out a 15-year loan. But they know realistically that they just don't think they can manage that payment if something was to change in their financial situation. So they take the 30-year payment. Now, all of you on this call, or all of you watching this particular video, know what that call goes like, right? How that experience goes. And we just concede to it oftentimes. In fact, 9 out of 10 people that had a previous 30-year mortgage go back and take another 30-year mortgage, even if they're 40s, 50s, or 60s, which could put them into, of course, 70s and 80s and 90s before they'd even have it paid off, which means they've given up on the prospect of ever paying it off. Well, there's a couple of things to take into consideration here. First, interest is not equal. It's a very complicated process. We'll get into a little bit more of that later. But we look at things by saying, if somebody has, say, 24 or 25 years left on a mortgage, 9 times out of 10, they're going to go right back to 30 years. Now, of course, if the goal is to get them out of debt, adding 4, 5, 6 years certainly is not going to help that process, even if it's a necessary evil as it appears on the surface. And they might have to add $4,000, $5,000, $6,000 in cost. But the worst part of it all is that the first roughly 7 years is almost entirely front-end loaded towards interest. This is not by accident, by the way. Back in the 1940s, when banks constructed those loans, they did a census report and realized the average person lived in their home 7.2 years. So they load as much interest as they possibly could during the entire period of time the average person was either going to live in that home or, of course, have that mortgage. Very unfair situation for the client. So even if you take a client from, say, a 6% mortgage to a 5 or even a 4% mortgage, again, we've increased, no doubt, the amount of debt. We've increased, of course, the time period to pay it back. So even if the interest rate is lower, even if the payment is less, the amount of interest per volume of each payment actually went up because we reset the clock on that front-end loaded interest to 0. So imagine if there was an opportunity to actually take that client that was kind of just feeling destined to have to go back to a 30-year and hoping, well, I'll make extra payments once in a while. And we know, unfortunately, that just doesn't happen. There's not a systematic process where most people do it consistently. Imagine being able to help them pay it off in as little as 8, 10, or even 12 years with the same minimum monthly payment and the same money they have, simply using it much more efficiently and much more effectively. The other aspect would be anything you can do to get you in front of more people. Imagine if you versus another mortgage broker were having a conversation about what it takes to be able to get a client. Imagine you being able to say, in addition to offering the most competitive rates and the best programs and, of course, the best service, we've actually aligned ourselves with an incredible technology device or platform that actually can help you bank like a bank, use your money more efficiently, and actually be able to build equity faster and pay that debt off in half or less time. Now that person that needed to get that 15-year loan that took a 30 could pay it off in maybe 8, 10, 12 years. Think about how that would change your business. Imagine being able to, as an example, have more retention of your clients, right? The goal is not only to get more clients, but to be able to maintain those clients you get. Increase the retention so that they're able to come back to you more often. If you open up an opportunity like this to them, you become more of a trusted advisor. You've helped solidify that relationship in a way where they're much more likely to come back to you in the future. In addition, being able to create an opportunity to get more referrals because you've created that value-added proposition to your clients. It kind of creates an entirely different perception of you and your practice and obviously your business than your competitors, which is very, very important. The other important factor is, we don't like to think about this a lot, but what do you do with those clients that you can't qualify? Maybe they don't have enough equity. Maybe they don't have adequate credit. Maybe their DTIs are out of line. So they can't qualify for a loan. 9 times out of 10, we send them off on their merry way and hopefully tell them to stay in touch. Maybe we set them up with somebody that can address their credit issues or things of that nature, or we put them on a drip campaign, possibly. But in reality, most of those, we just have to redirect our focus towards the next client we feel that we can help. Imagine being able to direct every single one of those clients to begin using our system to help them manage their money better, budget more efficiently, leverage their money more effectively, and be able to pay those debts down faster, boost their scores, and so forth. Now, you've actually opened an opportunity to them. They're going to be more likely to come back to you to be able to do that loan down the road. And here's an even bigger one. Whether you have 100 clients or even thousands of clients that you've serviced over the years, how much money do you actually make on them at any given month? Nothing. Now, unless they come back to do a loan for you, or perhaps you're fortunate enough to get a referral, you don't generate any additional revenue ever on that past client, right? Because it's a sale, it's a transaction, it's an event, unfortunately. Imagine being able to go back to every single client you've ever serviced and be able to say, you know, Mr. and Mrs. Client, instead of saying, hey, would you like to refinance? Or, hey, rates are low. You know, a lot of the same conversation you've heard many times. You reached out to every single one of them and said, we're very, very excited to announce that we partnered up with an incredible new technology to actually help the average person bank like a bank, be able to leverage every dollar they have more efficiently to eliminate interest faster and build equity more quickly, literally being able to pay off all their debts in half the time or less. We're going to do a free analysis to see if that can help you. Imagine just having a unique kind of a better way to be able to communicate with them to get them back in that conversation. Now you could literally take hundreds or thousands of clients and turn that into tens or hundreds of thousands of dollars from clients that currently would be a dead asset, if you will. The other thing you're looking to do is you're always trying to say, how do we help you do more of what you're doing, exactly where you're doing it, but to do more of it and to do it better, more efficiently, and be able to monetize it further. The other question you have to ask yourself as a financial professional always, whether we want to be thinking about it or not, is what is my exit strategy? What happens if the market turns? All of us know that the market's been very strong for a number of years now, really a decade, and we're all in the back of our minds saying, how much longer is it going to continue this way? How much longer before interest rates go up, inflation comes into play, taxes go up, values pull back down? All of those things, or collectively any of them or all of them, could have a very significant effect on your sort of day-to-day business volume. It could drop your business volume 10, 20, 30, 40% in a very, very quick period of time. What is your strategy to be able to diversify? Now, I don't mean distract your energies, but to diversify within the same experience with your client, to provide that value-added opportunity for them. So there's lots and lots of ways that a mortgage broker could be very, very benefited from using this. So not only, again, just to sort of recap that, being able to open up more doors to more people because you've got a different conversation, right? That competitive advantage that we're always seeking so much from our other competitors in our field. Something that is an opportunity to create a better sense of retention for those clients. They're more likely to come back to you. And it's very, very important because we spend a lot of energy and resources attracting those clients to begin with. Something that's going to create more referrals from you. That's really free money when it comes to a business professional and a financial professional. Something that's going to be able to give you that unique space in the market. Now all of a sudden you've got a lot of other individuals you know in the industry, right? You know a lot of other mortgage brokers. You know a lot of other financial partners, financial planners, advisors, real estate agents, things of that nature. You've now got a tool that you can open it up to them that's very, very, very powerful. So there's a lot of different areas. Now there's one more thing that I'm going to talk about that I think is important is we're going to talk about the interest rate myth, right? The average person thinks, wow, I've got a 5 or a 4, even a 3% interest rate on my mortgage. That's so powerful, it's so incredible, how could I possibly beat that? But it only appears that way. You see, the interest rate that you're represented on the note is only that rate over the 30-year amortized schedule. So if you were to actually take a mortgage statement, I invite you to do this, and take the total payment, separating escrows, but just the principal and interest payment, and divide the amount of total payment into the interest you're paying. Let's say the average payment is, say, $1,000, and $700 or $800 of that is interest. That's not 3%. That could be 60, 70, even 80% or more in interest that you're paying on every single payment every month on that debt. That's by far and away the most expensive obligation you'll ever have, which is why in that truth in lending statement, you're often paying 1.5, 2, even 2.5 times or more the principal balance just in interest. So our system is able to help them pay to the penny, to the day, exactly which debt to pay off, how much and when, to be able to make the most amount of interest and therefore be able to pay off the most amount of principal. In fact, effectively across the board, we reduce that overall weighted interest to somewhere between 1 and 1.5% on all the debts they have. But being able to eliminate that much interest, we're able to pay that much more towards principal, and as a result, your clients could build equity faster, be able to upgrade their house more quickly, and of course it just makes you the market maker in your space and so forth. So there's lots and lots of various ways that could be beneficial, but these are just to name a few. So you can certainly see that there are a countless number of ways that you can actually deploy this incredible new technology to not only further separate you from your competitors, but create that really extraordinary, unique, trusted source relationship with your clients. And one of our goals as a company, understanding how big and overwhelming the problem is with debt in our society today, is to literally be able to help create a movement where we can take back or buy back America one family at a time. And we certainly know that we can do that much more effectively linking arms with other financial services professionals that have spent years, maybe even decades, cultivating those relationships with their clients. It's one of the reasons that we deploy that unique strategy as opposed to automatically going directly to the consumer. Instead, we'd rather go through individuals that already have that credibility in a client base, that very embedded, intimate relationship with their clients. So again, we hope this was helpful to you. We look forward to speaking to you again soon. Again, my name is Richard Schaefer with United Financial Freedom. Thank you and have a great day.